Hello, welcome back to my channel. My name is Boluwatife, and in today's video, let's talk about RRSP. RRSP stands for the Registered Retirement Savings Plan. And in today's video, I'm going to talk about what you need to know about RRSP, who can open it, how you can open it, the withdrawing rules, the penalties, and every other related question. So let's get straight into the video. RRSP is a Canadian investment account that encourages Canadians to save and invest for retirement. It is more than just being a retirement savings account. It does other things. One is tax deduction. For example, with the help of RRSP, you are able to reduce your taxable income for that year. Secondly, is tax sheltering. Inside the RRSP, you can have your investment in it, and for every investment there will be growth. So with the help of RRSP, your growth is tax deferred. That means you won't pay tax every year on that growth until you withdraw. The third aspect of the RRSP is that it is long-term investing. So RRSP is not just a savings account, it's an investment account that is designed for long-term growth and not for short-term. RRSP can be easily opened through your banks, your credit unions, insurance companies, or trust companies. To open or contribute to an RRSP, you have to fall under the following categories. One, you have to be a Canadian resident. Secondly, there is no minimum age to open an RRSP. However, there is a maximum age. That is, you have to be below 71 years of age. Thirdly, you have to have earned income, either self-employed or you're employed. And finally, you have to file your income tax returns. Everyone will retire at some point. Even if you're a low income, middle income, or high income earner, it gets to a point that you need to retire. And that is why RRSP is a retirement tool for everyone. RRSP encourages discipline for retirement savings and allows your money to grow without being taxed each year. It's important for you to know your RRSP contribution limit, which is calculated as 18% of your previous year's earned income plus unused contribution room. So for you to get your exact contribution limit, you need to check your notice of assessment by logging into your My CRA account online. You go to the CRA website and you log into your account. For contribution limit, there is also contribution deadline. You can contribute during the year or within the first 60 days of the next year. For example, the deadline for 2025 contribution is March 2nd, 2026. If you exceed your RRSP limit by more than the lifetime 2000 buffer, you may receive a 1% per month penalty on the excess amount. So that's why there is a contribution limit. If your RRSP is unlocked, you can withdraw funds from your RRSP at any time, but the withdrawal is going to be added to your income for that year. That means that withdrawal from the RRSP would be taxable. Secondly, because the money is going to be added to your taxable income, this could move you up the ladder in the tax rate. And thirdly, you do not get your contribution room back after you've withdrawn the money from your RRSP. However, if you have a locked RRSP, you are unable to withdraw your money from your RRSP because it is locked. That means you have to wait until when you are retired for you to access the funds in the RRSP. So you can confirm from your issuer, that is either the bank you opened your RRSP or the insurance company, on if the account that was opened is locked or unlocked. There are government programs that allows you to withdraw from your RRSP tax-free. One is the Home Buyers Plan. So with the help of the Home Buyers Plan, which is a government program, you can withdraw up to 60,000 from your RRSP without being taxed. And there is also the lifelong learning plan, which allows you to withdraw up to 10,000 to maximum of 20,000 from your RRSP without being taxed. However, there is a time frame for you to return the money to your RRSP. So for the home buyers plan, if you withdrew 60,000 from your RRSP, you need to return the money you withdrew within 15 years. And if it's the lifelong learning plan program you used, you need to return or repay the 10,000 that you withdrew from your RRSP within 10 years. Failure to repay within this time frame would lead the withdrawals to be taxable. Someone might ask, what happens to my RRSP if I decide to relocate from Canada to another country? Then you should know that you can still keep your RRSP. However, you cannot contribute into the RRSP unless you still earn Canadian income and you file taxes. Then, if you decide to withdraw from your RRSP as a non-resident, then you are subject to 25% withholding tax. This withholding tax rate could reduce depending on the tax treaties between Canada and the country you relocated to. RRSP benefits everyone that is saving for retirement, but most especially high income earners, because it will help them to reduce their taxes. And for we that will be saving for retirement, it helps to shelter our investment. Thank you so much for watching my video till this time. If you learned something, let me know in the comment section, and you could do well to watch other of my videos that I'll be sharing on the screen. And I'll see you next time. Bye for now.